Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, this past session here on Tuesday, looking across the board, we had a bit of an offer building into the markets. The Dow and the S&P sustained it pretty nicely here, but folks, the Nasdaq off about 35 points. That represents about 0.6%. But look at the Russell off 19 points, folks. That's a 1.44% drop. By far the biggest percentage loser on the day out of all four of the major indices here. We saw crude get a bit of a pop here, closing up near the 53.35s. Also keep in mind there's a contract roll in there as well. We saw the gold hanging out near the 1220s all day, and we've been mentioning how the 1200s breaking above that would be a positive catalyst. So far we've seen that move higher nicely, and then the bonds here hanging up on elevated levels as we see a little bit of this risk off or risk aversion trade starting to re-enter the market. And as always, we'll see this on the charts, but we're going to start our analysis the same way we do every single day, talking about the S&P 500 dailies. So folks, here's that little battleground that we've been talking about right above the 2280s on the S&P 500s. If we take a look at the intraday charts, it's a lot clearer here that we need to get above those 2280s, right, to get above and build a leg higher. And folks, I'm kind of looking at a little bit shorter term resist, or I should say support here down near the 2250s. So if over the next couple of days you see yourself down below there, that's potentially the first early warning signs of a market that's starting to weaken on you. And then sort of intermediate, medium term support levels down here at the 2230s. And then obviously longer term support levels we've got to hold right above those breakout levels, the 2215s. Folks, if you do ever get down there, you'll also notice that you'll probably be down below that 50-day average as well. As we move over to the Nasdaq's actually posted on last week Friday new all-time highs on Tuesday, kind of backing off just a little bit. But one of the things we have mentioned here is we've been seeing some of the Nasdaq regain some of this strength here on the back of some of the bigger cap techs. Speaking of bigger cap techs, we're going to start having our first test of some of these big cap tech stocks here coming up on deck on Wednesday afternoon. We're going to have Netflix reporting earnings after the bell. This actually traded up into new all-time highs on Tuesday before backing off with the rest of the market, kind of almost looking a little bit like a reversal here up at these all-time highs. We've also got the Apple, the Facebook, the Google. Those are all going to be reporting within the next week and a half or so. But folks, this is the big one to start watching. These big cap techs, they've been lagging behind, and we'll see how this impacts the Nasdaq and if that relative strength can continue. As we've been mentioning, a higher relative strength or a leading relative strength from the Nasdaq is one of the hallmarks of a healthy bull market rally. You don't always see it, but typically this is the index, I should say, that tends to lead these bull markets higher. So watch that on the Nasdaq. As we move over to some of our additional markets here, talking about the crude market here. So crude, we've been just watching this balance out here between the 51s and the 54s. Any break above the 54, I think we will continue that leg higher from that potential bottoming process over the last year and a half. Remember, we were talking about that inverted head and shoulders breaking out there right above the 51s. Also taking a look at the bonds here, longer term, bigger picture. We did bounce off of those long-term supports back from 2013. So far, just building a bit of a balance here, but look at this, folks, pretty strong, almost looking like if it can get above these 125 evens on the 10-year futures, that might lead to a bit of a rally higher. And that would be somewhat similar to like the gold contract. We were taking a look at the gold contract here and how when we got above those 1170s, we were mentioning how that might lead to an additional bid coming into the gold. We did see that break out of those 1170s, and then we had watched it test these 1200s for about 2.5, 3 sessions before that finally broke the 1200s. Now look at this, up to the 1220s. So just looking at this chart, folks, we'll have to see. I would expect actually a little bit of a bigger balance to form right around these 1200s, seeing how this was a pretty big support and resistance level in the past. But folks, as you look at this, if we continue to grind higher, 1250 would be that next place to test. You can see here that was a prior support level, support until that finally failed. So again, that would be another place I would expect sellers to potentially start coming in, offering supply if we ever got up into those areas. But other than that, taking a look at Tuesday's trade, it was very quiet. In fact, we actually got stopped out of a couple of our swing trading positions here. We had nice gains in them. Let's actually take a look at a few of them. HQY was one of them. Just stopped us out just by a hair there, but but look at this, this move here. Whoops, let me zoom out just for a little bit. Right through these 42.10s, nice swing trade getting stopped out on Tuesday. Great profits in this one. Another one was this AERI. We took this right over about 2.5 days ago. We had some nice profits. We actually had scale out targets. Two of them got hit before we finally got stopped out today. And then one final one we're continuing to hang on to is this Shopify. And this Shopify, nice breakout right underneath these 45 evens, continuing to post higher highs on volume. And folks, on a day where there's a bit of a sell-off coming into the market, this is showing us relative strength. This is exactly what we want to see, and we're just going to hold it until our rules kick us out and stop us out of this position. But folks, as we approach earnings seasons, definitely be aware of when your companies are reporting, okay? And then game plan always has been, always will be, looking for the best relative strength stocks, breaking out of recognizable chart patterns, and preferably on volume. Other than that, folks, have a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.